Get ready for the ultimate tech update. The pace of innovation never stops, and we've got the must-know stories that are shaping our world right now. From groundbreaking shifts in the market to the big moves by industry titans, you're about to get the inside scoop. We're diving deep into a major player's strategic pivot, uncovering why a legendary investor made a massive change. Plus, we'll break down the market's latest movements and what it means for the future. You don't want to miss this. Subscribe and hit the bell. The investor's bold bet on AI. Billionaire David Tepper, renowned for his uncanny ability to predict market shifts and capitalize on economic downturns, has made a significant move that has the financial world buzzing. Tepper, the founder of Appaloosa Management, with a substantial $6.45 billion in assets under management, is widely regarded as one of the most successful hedge fund managers of his generation. His legendary status was cemented by his prescient call on the 2008 housing market collapse and subsequent financial crisis, followed by a highly profitable contrarian investment in bank stocks during the Great Recession, netting an estimated $7 billion. In a move that has drawn considerable attention, Tepper's Appaloosa Management completely divested its stake in Broadcom Inc. during the second quarter, which concluded on June 30. This complete sell-off is particularly noteworthy given Broadcom's significant role in the digital infrastructure landscape. The company provides a vast array of technology solutions, including semiconductors, software, and security products, which are integral to the mobile, broadband, cable, and data center industries. Broadcom itself claims that an astonishing 99% of all internet traffic passes through its technology in some form. The primary catalyst for Broadcom's recent growth has been the explosive demand for artificial intelligence, AI technologies. In its second fiscal quarter, ending May 4, Broadcom reported impressive financial results, with revenue reaching $15 billion, marking a 20% year-over-year increase. Earnings per share, EPS, surged by 44% to $1.58. The company's management specifically highlighted the robust demand for AI solutions as the driving force behind this growth. AI revenue alone accounted for $4.4 billion, a remarkable 46% increase, continuing a streak of year-over-year growth that has now spanned 9 consecutive quarters. Within the AI segment, custom AI accelerators saw double-digit growth, while AI networking solutions experienced an exceptional 70% surge. Tepper's decision to sell his Broadcom holdings came after a period of volatility for the stock. Broadcom's shares had experienced a 28% decline in the first quarter, influenced by broader economic anxieties and trade uncertainties. However, the stock subsequently rebounded strongly in the second quarter, surging by 64% as investors began to look past immediate concerns and focus on the long-term potential of AI. Despite this strong performance, Tepper's decision to exit his position suggests a strategic reevaluation, likely driven by valuation considerations. Broadcom concluded the quarter with a forward price-to-earnings (P/E) ratio of 41, indicating a premium valuation that Tepper may have found less attractive compared to alternative opportunities. Instead of Broadcom, Tepper has significantly increased his investment in Nvidia, a leading player in the AI chip market. Appaloosa Management boosted its stake in Nvidia by an astounding 483%, acquiring 1.75 million shares, which now represent approximately 4.3% of the fund's portfolio. This move marks a dramatic reversal from Tepper's previous strategy, where he had sold off 93% of his Nvidia holdings over the preceding year. Nvidia is widely recognized as the pioneer of graphics processing units, GPUs, which are considered the industry standard for AI computations. The company commands a dominant 92% share of the data center GPU market, essential for large-scale AI processing. Nvidia's recent financial performance further underscores the demand for its AI chips. For its fiscal first quarter of 2026, the company reported revenue of $44 billion, a 69% increase year-over-year and a 12% sequential rise. Adjusted EPS of 96 cents represented a 62% increase. The company anticipates this strong momentum to continue, projecting revenue of $45 billion for the second quarter, which would signify approximately 50% year-over-year growth, building on an already impressive 122% growth in the prior year. While the exact timing of Tepper's increased Nvidia investment within the second quarter is unclear, a review of Nvidia's stock chart reveals a potential opportunity. In early April, Nvidia's stock experienced a significant downturn, reaching its lowest price in nearly a year, and its valuation became exceptionally attractive, trading at less than 21 times forward earnings. This was the stock's lowest valuation in over a year. Tepper's strategic pivot suggests he identified a compelling entry point. Although Nvidia has since recovered, its valuation at 31 times next year's expected sales, driven by its AI-centric Blackwell processors and the recent lifting of the U.S. government's moratorium on H20 chip sales to China, still presents a strong investment case in the AI revolution. Audience impact. Investors are closely watching Tepper's moves, with many seeking to understand the rationale behind his shift from Broadcom to Nvidia, viewing it as a potential indicator of future market trends in the AI sector. But is this the end of the story for Broadcom? Next up, we'll analyze the broader technical and fundamental picture for Broadcom as the tech sector navigates AI and Federal Reserve uncertainty. Broadcom's shifting fortunes, a deep dive. Broadcom Inc. recently experienced a notable market fluctuation, with its stock dipping by 1.27%, accompanied by a significant trading volume of $6.8 billion, ranking it ninth among all stocks. This movement occurs against a backdrop of broader industry trends, particularly the rapid advancements in artificial intelligence, AI, and ongoing uncertainty surrounding Federal Reserve policies. Understanding Broadcom's current position requires a look at both its technical chart patterns and its underlying fundamental strengths. From a technical standpoint, the recent dip suggests a short-term pullback, which is not uncommon for stocks that have experienced significant growth. The high trading volume indicates substantial market activity and investor interest, even amidst the slight decline. Analysts are closely monitoring these technical indicators to gauge potential support levels and future price movements. The current market sentiment towards tech stocks, which are often sensitive to macroeconomic factors like interest rate changes, plays a crucial role in these fluctuations. Fundamentally, Broadcom remains a powerhouse in the technology sector. Its diverse portfolio spans semiconductor solutions, software, and security products, serving critical industries such as mobile, broadband, cable, and data centers. The companies claim that nearly all internet traffic, 99%, passes through its technology, highlights its pervasive influence and essential role in the digital ecosystem. The recent surge in demand for AI has been a particularly strong growth driver for Broadcom. In its second fiscal quarter, revenue climbed to $15 billion, a 20% year-over-year increase, with AI revenue contributing $4.4 billion, up 46% year-over-year. This sustained growth in AI, which has now continued for 9 consecutive quarters, showcases the company's strategic positioning in a high-demand market. However, the market is also factoring in external pressures. The broader economic climate, coupled with uncertainties surrounding potential trade policies and Federal Reserve actions on interest rates, can create volatility. While Broadcom's AI segment is booming, and its custom AI accelerators and AI networking solutions are seeing robust growth, investors are weighing these positive developments against potential headwinds. The stock's valuation, which stood at a forward P/E ratio of 41 at the end of the second quarter, reflects high investor expectations, making it susceptible to corrections if growth forecasts are not met or if broader market sentiment shifts. The recent divestment of Broadcom stock by billionaire investor David Tepper, who instead pivoted to Nvidia, has also influenced market perception. While Tepper's move was likely valuation-driven, it has led some investors to scrutinize Broadcom's growth prospects relative to its AI chipmaking peers. Nonetheless, many analysts maintain a positive outlook, emphasizing Broadcom's strong market position across various technology segments and its critical role in powering the Internet's infrastructure. The interplay between AI demand, Fed policy, and global economic conditions creates a complex landscape for Broadcom. While the company's fundamentals, particularly in AI, remain strong, the market will continue to assess its ability to sustain growth and manage its premium valuation amidst these evolving dynamics. The $6.8 billion in trading volume on the day of the dip indicates significant institutional and retail interest, suggesting that while some are pulling back, others are seeing opportunity. Audience impact. The market's reaction to Broadcom's stock movement is being closely watched by investors and industry analysts alike, with discussions centering on whether the current dip presents a buying opportunity or signals a more significant trend shift in the tech sector. But what does this mean for the future of AI chipmakers? Stay with us as we explore another major investor's strategic playbook and their bets on the cutting edge of AI innovation. Investors' AI bet: Tepper ditches Broadcom for Nvidia. Billionaire investor David Tepper, a figure synonymous with prescient market calls and substantial financial gains, has executed a significant portfolio shift, selling his entire stake in Broadcom Inc. and redirecting capital into a high-profile artificial intelligence, AI chipmaker, widely understood to be Nvidia. This move by the founder of Appaloosa Management, a hedge fund managing $6.45 billion, is particularly noteworthy given his track record, which includes correctly predicting the 2008 financial crisis and profiting immensely from contrarian investments during the subsequent recovery. Broadcom, a company whose technologies are fundamental to 99% of internet traffic, has seen substantial growth driven by the AI boom. In its second fiscal quarter, revenue reached $15 billion, up 20% year-over-year, with AI revenue soaring by 46% to $4.4 billion. This robust performance, sustained over 9 consecutive quarters, highlights Broadcom's critical role in the AI infrastructure landscape. Despite this strong growth, Broadcom's stock experienced a 28% slump in the first quarter due to economic concerns and tariff uncertainties, before rebounding 64% in the second quarter. Tepper's decision to exit his Broadcom position, even with its strong performance, is likely attributed to the stock's valuation, which carried a forward P/E ratio of 41 at the quarter's end. In contrast, Tepper has dramatically increased his investment in Nvidia, acquiring an additional 1.75 million shares, boosting his stake by 483%. This represents a significant turnaround from his previous strategy of selling off 93% of his Nvidia holdings over the past year. Nvidia's dominance in the AI sector is undeniable, holding a commanding 92% share of the data center GPU market, the backbone of AI processing. The company's recent financial results further validate this position, with first quarter fiscal 2026 revenue reaching $44 billion, a 69% year-over-year increase. Nvidia has guided for $45 billion in second quarter revenue, projecting continued robust growth. Tepper's renewed interest in Nvidia may have been sparked by a dip in the stock's price in early April, when it traded at its lowest valuation in over a year, at less than 21 times forward earnings. This presented a compelling buying opportunity. While Nvidia has since recovered, its current valuation, around 31 times next year's expected sales, is still considered attractive by many, especially considering its leading position with AI-centric Blackwell processors and the recent removal of the U.S. government's moratorium on H20 chip sales to China. Tepper's move suggests a belief that Nvidia offers superior growth prospects and a more attractive risk-reward profile compared to Broadcom at current valuations. This strategic pivot by a high-profile investor like Tepper provides valuable insight into how top-tier funds are navigating the competitive AI landscape. It underscores the intense focus on companies that are not only leading in AI hardware, but also demonstrating sustained, high-growth performance and offering compelling long-term value, even at premium valuations. Audience impact. The financial community is dissecting Tepper's strategy, with many seeing his increased investment in Nvidia as a strong signal of confidence in the company's continued dominance and growth trajectory in the AI market. Could this be the ultimate AI play? We're not done yet. Stick around as we break down the latest market movements impacting major tech players. Market dynamics, Broadcom's valuation and tech sector uncertainty. Broadcom Inc. recently saw its stock price decline by 1.27%, a movement that occurred amid significant trading volume, with $6.8 billion exchanging hands, placing it ninth in market activity. This fluctuation is occurring within a broader context of technological evolution, particularly the pervasive influence of artificial intelligence, AI, and macroeconomic uncertainty stemming from Federal Reserve policy considerations. These factors collectively shape the current investment landscape for technology companies. From a fundamental perspective, Broadcom's business model is deeply integrated into the fabric of the Internet. Its semiconductor, software, and security solutions are indispensable across mobile, broadband, cable, and data center industries, with the company asserting that 99% of Internet traffic traverses its technology. The company has experienced remarkable growth, especially in its AI segment, which saw revenue climb 46% year-over-year to $4.4 billion in the second fiscal quarter. This sustained demand for AI products has been a key driver for Broadcom, contributing to a 20% year-over-year revenue increase to $15 billion for the quarter. However, the market's reaction also reflects underlying concerns about valuation and future growth sustainability. Broadcom's stock had surged 64% in the second quarter, following a 28% dip in the first quarter attributed to economic and tariff uncertainties. By the end of the second quarter, the stock's forward price-to-earnings (P/E) ratio stood at 41. This premium valuation, while indicative of investor confidence in its AI prospects, also makes the stock more sensitive to any perceived slowdowns or shifts in market sentiment. The decision by prominent investors, such as David Tepper, to divest Broadcom holdings in favor of other AI chipmakers like Nvidia further fuels discussions about relative valuations and growth opportunities within the AI sector. The broader tech sector is navigating a complex environment. The rapid advancements in AI continue to create immense opportunities, but they are also accompanied by significant capital expenditure requirements and intense competition. Furthermore, the Federal Reserve's stance on interest rates and inflation remains a critical factor influencing investor appetite for growth stocks, which are typically more sensitive to changes in borrowing costs and economic outlook. This uncertainty can lead to increased market volatility, as seen in Broadcom's recent trading activity. Analysts are closely evaluating whether Broadcom's current stock price adequately reflects its long-term growth potential, particularly its strong position in AI infrastructure and networking solutions. The $6.8 billion in trading volume suggests that investors are actively repositioning their portfolios, balancing the company's robust performance against its premium valuation and the broader macroeconomic uncertainties. The market is essentially weighing the tangible benefits of Broadcom's AI contributions against the potential risks associated with its valuation and the unpredictable economic climate. Audience impact. Market participants are keenly observing how Broadcom performs amidst these mixed signals, with many analysts weighing in on whether the current stock price represents a fair valuation given the company's strong AI segment and the prevailing economic uncertainties. Will these market trends continue? We've covered a lot of ground today, but the news cycle never sleeps. Stick around for a rapid-fire recap of all the top stories. And that's a wrap on today's Essential Tech Updates. We saw billionaire investor David Tepper make a major shift, divesting from Broadcom and doubling down on Nvidia in the AI race. Broadcom itself experienced a notable market dip amidst tech sector uncertainty and AI's evolving role. If you found this breakdown valuable, make sure to smash that like button, subscribe for more, ring the notification bell, and drop your thoughts in the comments below. Don't forget to follow us on all social platforms for even more insights.